This is Christopher Lewis from the dailyforex.com trading desk taking a look at the upcoming April 2nd Forex session. In front of you is the Euro US dollar pair, a pair that has been, quite frankly, quite frustrating for a lot of fellow traders. We had a bounce, a poke through the 132.50 level, which quite frankly runs to 133 as well, and then a fall back through it. And at one point in time, many traders thought that perhaps we would see some type of fall here and a head and shoulders. However, as you can see, based upon comments by Ben Bernanke that the United States was going to keep rates exceptionally low for as long as possible, the pair did poke up through this resistance area, came back down, formed a doji on Wednesday, a hammer on Thursday, and then poked higher on Friday, triggering a buy signal. It is at this point that I believe the pair will run to the next natural support resistance area, large one I should say, at 135. This will be predicated on a move above the highs from the Friday session, but this is a short-term trade at best. There are far too many headlines that could come out of Europe that could cause problems to feel comfortable holding this pair until we get a daily close north of the 135 level. Alternately, if we break the hammer from Thursday to the downside, this should signal a run back down to 130. Looking at the 135 level again, if we do rise to that level, any sign of weakness could be sold as well. The bond markets in Europe are showing signs of distress as the spreads between Spanish and German bonds are widening, not shrinking, which is a very euro negative sign. Because of that, I'm very leery of holding the euro any longer than I have to, but one cannot argue with the bullish signs here. Perhaps a move of about 100 pips or so, 120 pips, isn't really out of the question. A fall, of course, from there on signs of weakness wouldn't be out of the question either, as it would just signify a continuation of what we've seen, basically bouncing around between 130 and 135 for quite some time if you take out the little bit of a spike down. With all of this being said, it is very likely that the first move will be up. Now the real question is where the market goes from there. I believe for the longer term, we are probably looking at a market that wants to sit between 135 and 130 as a comfortable resting place. But of course, headlines out of either the United States or Europe could definitely have a major effect on this pair, obviously, and one would have to think that the risk is to the downside as far as news flow is concerned, as a lot of this rise in the euro may be predicated just simply on the fact that we have euro fatigue. There is a time, though, when the markets will start to focus on Europe again, as there are a lot of massive bond auctions coming this year, starting in April. So we are starting to get close to that period in time, and this is another thing that makes me think that perhaps the pair falls over the long run. That being said, in review, a break of Friday's high is bullish, at least in my opinion, until we get to about 138.75 or 134.75, excuse me, and we take it would take a daily close above the 135 for me to hold this pair for any real length of time. Failure at 135 has me selling, and a break of the Thursday lows has me selling as well, both of which have me looking for 130 before it's all said and done.